Welcome to Kenya's Real Estate Show, the show in which we talk everything about real estate in Kenya. This week, we shall be covering REITs, Real Estate Investment Trusts. Welcome to the show. Okay, so let's start by understanding what a REIT is. Let's use the analogy of the stock market. So when you buy shares in the stock market in a certain company, say for example, Kenya Airways. When you buy shares in Kenya Airways, you're buying a small piece of Kenya Airways. So you own that small piece of Kenya Airways. What happens is when you invest in a REIT, you own a part of an investment vehicle. And the law has regulated that this investment pool has to be invested in real estate at a certain percentage. For the first time in Kenya, we have an opportunity to invest in a REIT through the STANLIB Fahari I-REIT, which is currently open in the market for investor participation. It was opened on 22nd October and it shall be closed on 12th November. That's at least for the IPO stage, the initial public offering stage. Before we get into the details of the Fahari I-REIT, let's just look at the various categories of REITs that there are and what the distinction between them is. So we've said a REIT is where we pool money together and invest in real estate. There are currently 3 categories of REITs in Kenya as provided for by the regulations governing these investment vehicles. So the first category is an income REIT, as in an income real estate investment trust. In this case, we pool funds together and we put these funds in income generating real estate. It will most likely be a portfolio, not necessarily one property, but it will be spread across various subsectors of the real estate sector. But bottom line is all the properties in this case are income generating. So the investor is benefiting from the rent or other incomes that are being achieved from the portfolio. So an example of this is the currently available STANLIB Fahari I-REIT. It is actually an investment REIT. So it means that the funds that they are seeking to get from the public will be invested in income generating real estate. Examples include residential, commercial, office blocks, shopping malls, industrial properties, specialized properties like hotels, hospitals, and schools. Yeah, so they'll have quite a mix of this. We'll look more into that. Secondly is the D REIT or development REIT, which is pulling money together, which is then invested in development of real estate. In this case, what you're looking forward to is the returns after selling of the property once it's been developed. Alternatively, a D REIT can then convert into an I REIT, where first of all, you benefit from the capital gain from the value addition. Basically, when you build a property on land that didn't have a property, you've added value to the land. So first of all, you benefit from that, and then it could be spread on to continue to being an I REIT, where you also now continue benefiting from the income being generated out of that real estate. We don't yet have one, and when we get one, we shall for sure inform you about it. Third is a Sharia REIT, which it can be one of the two, either an investment or development REIT, but it has to be compliant with Islamic laws as pertains investments. So in the next episode, we'll be looking at the step-by-step process for you to be part of this opportunity. Remember, it closes on the 12th of November, 2015. So keep asking your questions. Let's handle them so that you're confident as you go in to invest in this. I'm Lucy Kamal. Thank you for watching.
We're sorry, the number you have dialed is not in service at this time.